Right then, so looking at the bird, this is an analysis that we've been doing all week. There's a number of videos um, on my channel, which you can find by looking up Ross J. Burland Forex on YouTube. And you'll note the bear's hungry for a bird sandwich. Um, we were analysing this since the New Zealand CPI. And my dog's come over to say hello. She threw me off track. So, yeah, we've been analysing this bird for the whole week, basically. And we've called it right. So far, so good. Now, I've written an article. I'm an analyst and editor for FX Street. I've been around for around 10 years with them. For those that don't know me, I mean, you can look up my bio. I have over 20 years experience in the industry. I've worked across a number of facets of it in London. And I've worked as a dealer. I've done a spell on the market making desks. I've worked most of the most part of my career was client facing. So on the sales side, corporate FX desk manager for a company called Rational FX, and so forth. So I've got plenty of background in analysis and dealing forex. So I write articles on a daily basis. So if you want to follow me there, you can hit me up. But anyway, so we can just run through this analysis on the Kiwi from here. I've entitled it "The Bird is Perched on a Broken Branch of the Week's Bearish Template." So essentially, what we're looking at here is a scenario whereby now if I take away these, well, let's just run through. So we've moved up to come down. That's the thesis, and we've got plenty of topping activity going on around the 57 handle, up as high as 57.5, pretty much. So we're working within that range currently, and we're sliding over here into Tokyo. We've been in Tokyo for a few hours now, and not much is going on. But if we bring up the article, if we look at this structure, so why have I called it a broken branch? Well, we've already broken, we've come up and we've gone down and we've taken out this structure here, which was the last higher low before this peak's formation's high. So that to me is significant, and it served as a support or and resistance for the week. And we're currently stalling over here. Now we have pinned lower, and that's that structure there, and we've come through, but we've broken that as well. So this essentially, all of this here is structure which has already been broken. Now today, it's being Thursday for me, Friday in Asia. We've created this M formation, which is a reversion pattern. So the price likes to come in and retest the neckline of these patterns. So that's what we've seen already, and we've actually had a subsequent sell-off in Asia. So that's good. So essentially, what's happening is that we've come in to these longs positions. Anyone down below here is in the money, and that's what we're going for. So we've come in, we've taken out some of the longs over here, put a bit of a squeeze on. Then we've pulled in breakout traders in this move, which have been, tracking, trying to go higher in impulse correction, impulse, but they've been stopped out. And that could be the ammunition then to continue lower. So if we were to stall at last week's high in whatever correction we might see today heading into London, then that will give us sell high opportunities to get in for an almighty blow off, which could cause. So if we break 5650, or this area essentially, we'll get the long squeeze will be on into this money down here. So if we just head back to the live chart, what we could do is draw up a volume profile of this week's range. But before we do that, let's just stick with this article. We have US yields which have taken off towards the end of the week. So the US dollar will be tracking that. It's been a bit of a laggard to the yields. So we could see that catch up. I think they're already doing that, in fact, in Asia today. But this is the reverse of what we were looking at, the M formation on the Kiwi. This is the W formation. So we can expect a pullback. So we've had that pullback already in the open. You can see that there. And we've actually subsequently moved up today away from the trend line. But that trend line is there. And you've got the support of the neckline. So that would be expected to then keep the US dollar on track, which is also formed a W formation. There's the support, and we're in anticipation of a break beyond Thursday's highs and up into this area of resistance and potentially higher. Okay, so that's the thesis on the dollar and a lower Kiwi as a result. So what now is a very messy chart. Let me get rid of the drawings. Environmental. Well, I can't figure out what's going on. It says here hide drawings, right, and then it hides everything. Hide indicators, and it leaves the volume profile up. So I can't seem to get rid of the drawings, which is what I want the indicators on. Hide positions and orders. Yeah, let's go. Hide all. Excellent. Well, okay. So let's look at the volume profile. You've got the point of control up high, so we're below that. I'd expect then perhaps to move up in towards it because we're oscillating around high volume areas. A break of this high volume area would open up the risk to into the longs below here, which are no, sorry, we've had them already. So we'd be looking for a fast move into here, a little bit of a pullback, putting some heat on the trade, and then a blow off if we can get below these lows, right? And potentially trickle down all the way into this week's low, last month's lows, and so on. Now, with it being Friday, we may not get the volumes that we're looking for this to play out today. And it may need to wait until next week, or the thesis could be completely wrong. But if we go over to the daily chart, we're on the front side of the downtrend trend line, right? So while we're below this, and in anticipation of a move lower, this is a pretty weak right-hand side impulse of the W formation. So it's already in deceleration. and the price has it's embarking on a correction towards the 50% mean reversion area, along with, I mean, we've already had that spike which happened on Thursday. I don't know if that was the Bank of Japan intervening in Europe, could have been, which is seeing the price therefore supported at the 61.8. So we could see a build up of longs, if our thesis is incorrect, around here for a break of structure and then for the move up. And then we'll be flipping the switch on this to target last month's highs around 61.5. So there we are. And we talked about yields, I believe, right? So we're looking at the yields. We're in anticipation of them moving up. If they were to move up, dragging the dollar up, and then our thesis to the downside would be in play for a break of the bearish cycle lows. And, given that, similarly, if we look over here, you've got the W formation and it's, see that weakness and then the rollover. Well, we're seeing a similar effect over here. So we're in anticipation of the rollover for fresh bear cycle lows. But it all now depends on the dollar. The wild card is the Bank of Japan, whether they'll step in again tonight. I put together a video on my channel with regards to that. I was actually doing some analysis on the euro, and I was wondering whether we're going to see fresh lows in the euro or whether the Bank of Japan are going to step in and weaken the dollar. Now, given it's Friday, I don't know if the volumes would be there. Who knows? I don't know how they go about it really. I mean, they just need to call up the dealing rooms and start asking for prices. And once the market knows that the Bank of Japan or Ministry of Finance are in looking for prices, then that's going to have a domino effect on the dollar and the forex complex. So whether they do that on a Friday, I mean, they might spook the market, and we could see some really wild price action, and disencouraging anyone to be speculatively selling the yen just through verbal intervention. Really, we've already had a bit of that this morning in early Asia or Tokyo when they came online. But they'd look for the volumes in European trade to actually do anything physically. So whether that would be done on a Friday, I mean, last time they did it and admitted to doing it, rather, the last time they physically went into the market and announced what they were doing, or what they had done, rather, was the day after the Fed last month, around the 22nd of September. So we're a month on from that. So whether they've got a plan to do that on a once a month, at the moment, but they sit around and they obviously put a plan together, don't they? So could be imminent. So that's something to bear in mind, and then that obviously would potentially knock the thesis for 6. I mean, so far, any of these interventions have only really had a lasting impact of a day or so. So, but you don't want to be caught. You don't want to be in the market when they're doing it, because your stop loss won't be guaranteed and could be considerably out of pocket by the time your broker fills you. So just be careful out there at these times. We've got the Fed coming up at the beginning of next week. So not next week, sorry, the week after, the beginning of next month. So we've got dollar yen. Where is it trading at the moment? It's teetering around. Yeah, well, there we go. It's even higher. So that's something to bear in mind. We're heading up towards Europe. So we might see something there. I mean, if we look at EU, when was this? That was the 22nd of September when they last physically intervened. And then again on the CPI print over here. So we've had a 100 pip move on that. That was a 500 pip move. And you'll see the ripple effects in the yields and so on. So there we are. All right, so good luck out there. Have a nice weekend if I don't post anything on Friday. But I'm going to be watching this New Zealand dollar and see how it plays out to end the week. Cheers.